Hello and good day, everybody. You're with Markit Manufacturing, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlook. As usual, we're going to start covering a short coverage with the North American markets. The Dow Industrial average went about 13 pips down on Friday and opened with a negative gap today. The Nasdaq went about 10 pips up, but opened with a negative gap today as well. The DXY, the greenback, is up to almost 95 points from 94 last week. The CPI year-on-year in Canada, as expected, retail sales month-on-month, better than expected and higher than previous. Retail sales, excluding autos, better than expected, higher than previous in Canada last week. Month-on-month, the CPI came out worse than expected by 0.1%. Markit Manufacturing, 0.3% worse than expected. CB leading indicator month-on-month, better than expected. Existing home sales change, as expected, 8% and higher than previous. Durable goods orders is what we have today in the agenda for the US dollar. Consumer confidence, the Fed interest rate decision, and monetary policy statement, along with the GDP preliminary data, is what we're going to see this week. European markets, the DAX and the CAC went up, 110 pips for the German index and 40 pips for the French. We had an election in Greece. Greek Prime Minister-elect Alexis Tsipras set up a confrontation with his European peers as he prepared to form a coalition dedicated to ending austerity, saying the era of bowing to international demands for budget cuts is over. Even in a fragile coalition, the result hands Tsipras a mandate to confront Greece's program of austerity imposed in return for pledges of 240 billion euros in aid since May 2010. The challenge for him now is to come good on his election. Pledges including a write-down of Greek debt, while persuading creditors in Berlin and Brussels to keep aid flowing. European policymakers, including the German finance minister, warned Greece before the votes against diverting from its agreed bailout program. The EU country finance chiefs are due to discuss Greece when they meet in Brussels on Monday. Germany's finance minister said in a statement that his position was unchanged after the election results and the agreements reached with Greece remain valid. Basically, the euro touched an 11-year low as the party committed to renegotiating Greece's international bailouts, and they won a victory in weekend elections. They also are setting up a possible confrontation with the nation's European partners. We are going to see the European Union retail sales in the agenda. Of course, there's a Eurogroup meeting starting today and tomorrow. The German IFO business climate came out worse than expected already today. The expectations and the current assessment came out positive. On Thursday, we're going to see Germany's unemployment rate and CPI data, and consumer confidence as well. Friday, in the Eurozone, CPI and unemployment rate as well. Moving on to UK markets, the FTSE 100 lost about 20 points on Friday, closed at 6,750, a little bit over that. The sterling touched a 7-year high against the euro after the ECB QE program was launched. Simultaneously, the pound touched 18-month low against the greenback after the BoE MPC unanimous interest rate vote. The sterling gained almost 2% against the euro in the previous week and lost about 1% against the dollar. We have the GDP data on the 23rd. From this week is expected to show positive growth, 0.6% for the fourth quarter of last year. Mark Carney announced in a speech in Davos over the weekend that after the ECB QE program has been boosted with 1.2 trillion euro, the central bank should be on alert for excessive risk-taking on the markets, and the illusion of liquidity remains. Moving along to the Asian Pacific markets, stocks in China declined for the first time in 5 days in a row. Basically, we have a negative growth forecast there. Moving to the Nikkei 225, which has declined about 30 pips on Friday and regained most of it during the night. Japan's exports rose more than forecast in December, reaching the highest level in 6 years and pairing a record annual trade deficit caused by energy purchases and a surge in imports before April's sales tax increase. Stronger exports should support an economy that contracted last year after consumers cut spending following the tax rise. The Bank of Japan last week raised its forecast for growth in the fiscal year starting in April, with Governor Kuroda saying slumping oil prices will boost the growth. The yen weakened against the dollar immediately after the announcement, after the data was released, and then recovered right away. Moving on to the land down under, it has a national holiday today, National Day for Australia. We have an indication that the iron ore exporters from Australia are winning the battle for market share in China, boosting cargoes to the largest buyer and squeezing higher cost producers as prices decline to the lowest level since 2009. The Aussie dollars slide below 80 cents versus the US dollar for the first time since 2009 is being fueled by speculation the central bank will need to cut borrowing costs to a new record low. Traders see 47% chance the Reserve Bank of Australia will lower rates at this year's first policy meeting on February 3rd, which is up from 25% odds in January, the beginning of January. No major moves for the condol pairs. Only the Japanese yen has moved against the pound, 140 pips up, against the US dollar, 85 pips up, and the euro, 150 pips. For the week ahead, on Wednesday, we have the monetary policy statement, interest rate and trade balance in New Zealand, and Thursday, Japanese CPI data. Commodities, the S&P 500 index lost about 30 points from Friday's session. Oil fell to the lowest level in almost 6 years as signs that Saudi Arabia's new king will maintain its production policy, and rising U.S. Crude stockpiles bolstered speculation that the global glut will persist. Hedge funds boosted bearish wagers on oil to a 4-year high as U.S. supplies grew the most since 2001. Money managers increased short positions in West Texas Intermediate crude to the highest level since September 2010. President Obama's call to restrict oil exploration on 12 million acres of the Arctic National Wildlife Refuge probably won't have much practical impact for the area, which is already off limits to drillers. Moving along to gold, traded near a 5-month high as the anti-austerity party in Greece had a victory, which also raised prospect that the country will seek to renegotiate the terms of international bailout. The natural gas had a range of about 10 cents on Friday. Trend is to go up because of the weather forecasts for a heavy snowing in the US, mainly in the East Coast area. On Wednesday, we're going to see the EIA crude oil stocks change, and Thursday, the natural gas storage change for the week. This is pretty much all from me from today. Thank you very much for your attention. Cheers and have a successful trading day. Bye-bye.